Covivio is a major real estate investor from France and operated in France, Italy, and Germany. We are having investment in hotel sector, in office sector, and in Germany our main focus is residential, and we have been investing in this sector for 15 years. We've now a major regional focus on Berlin and on Leipzig and Dresden, where we find a lot of opportunities.
Great, thank you. Rainer.
MPC Capital is a multi-sector asset manager in Hamburg based. Within the real estate sector, we run and operate now a development and operations platform for student housing and micro-living for some 5 years. Our core brand in the German market is Stay 2, where we operate currently some 1,500 units with another 500 to come to the market within the next 12 months.
Great, Dan.
So within LaSalle, the debt and special situations team for about the last 10 years is deploying capital on a lending basis, really across the spectrum between whole loans, junior lending, but in particular development lending. And so student housing really has been one of the core strategies for that development lending side since the beginning. So we started in 2013 with a large project in central London, a £100 million development loan. And we've been doing student lending across the UK and now throughout Europe in the last couple of years, particularly in Spain and Portugal. So we backed the first large acquisition in Spain, which was a portfolio of 6 assets, 4 built and 2 development sites. We provided acquisition funding, development funding, and we've since grown our business in particular in the Iberian Peninsula since then. But we've always been active in very operational assets, so students have been a big part of it, but as well rental products, micro-living, anything that's got a bit of an operational angle. It tends to be something that we're more active in than, say, the banks.
Okay, great. James.
Yeah, we're a relatively new organisation, Invest Aberdeen. We are an inward investment hub for the region. We are a joint effort between the 2 local authorities, the city authority and the surrounding area as well. And we are there to support inward investment, but also to support, we've got £8.4 billion worth of infrastructure investment coming into Aberdeen, some of which has started and been delivered. But up to 2030, 8.4 billion, which is really significant. So we're trying to maximise the effect of that for the region.
Great, thank you. Let's start with you, Rainer. I mean, residential real estate continues to grow. I mean, we've seen the slides there from Stefan. Particularly for student housing, but residential has also been a significantly growing focus, really, for institutional investors. What's your sense of it as an asset class? What do you think the key drivers are, particularly looking at the European market and the markets then drilled down in, that you're active in?
Well, I think there are very different arguments to be taken into consideration. One is from an investor's point of view, residential delivers pretty much rock-solid, non-volatile returns. On the other hand, prices have come up, which is due to the fact that we see a lot of cheap liquidity flowing around in the markets looking for investment opportunities. I think when you're talking about residential, you need to be careful in the differentiation between macro and micro. We have seen also on the student side a macro view where you see growth rates by countries. In the last few months, we've seen a lot of published data on price increases by markets on the residential side in Europe. And I think if you, for example, take a look at Germany, which is the market I'm most familiar with, we see very strong differences between A, B, and now C cities, where the overheating trend in A cities is pretty much driven by a factor which is seen all over Europe, which is a strong reurbanization. We see all age groups, be it elderly people, be it young people, be driven by international increasing traffic. We see a very, very strong magnetism by some cities, and these cities are completely out of balance as regards demand and supply when it comes to accommodation. And this is the main point which drives prices. So from an investor point of view, I think you need to be very selective which cities you're looking into, which micro locations within the cities you're looking into, and which asset type you're looking into. You're looking for multifamily, you're looking for micro living, or you're looking for student accommodation or extended stay or hotels, which all wraps up now under the name tag accommodation. And all of these provide different risk-return profiles and need to be assessed carefully to prevent you from being stuck in the right place with the wrong asset.
Thierry, let's just come to you. From your point of view, how are the demographics that we've been talking about earlier in sessions that we've had on cities and what's happening with urbanization, how are the demographics shaping and influencing the residential sector and your investment strategy? And do you think there are shared themes, I guess, across the European market, across the markets that you're working in?
Yeah, so about Germany, what is really strange when we entered 15 years ago in Germany, demographic forecasts were really bad. So looking to the prospect, Germany population will shrink, and definitely residential sector was not a good asset class. What we have seen is the forecasts were wrong because they were projecting past figure in the future, and definitely Germany has done much more in terms of demographics the last year, and due to the immigration, due to students mobility which come to Germany to study but then stay also in Germany, figure will change. So I think the midterm prospect for Germany, even if the demography is a bit less dynamic than country like France, will be good. But as we just said there, you have to be really selective in where you invest in Germany, because the top 7, the top 10 German city will get this population. So you will have a shrinking population, and it's already the case in middle-sized city, where the value of residential will not grow, and except for individual housing will downside, but major city will continue to grow. And even with not such a strong demographic figure of Germany, as construction volume is really low, then the disbalance between offer and demand will continue to grow. So we are really positive on Germany, and in fact all these long-term forecasts, they are not so accurate as we have seen with Germany so far.
Okay, good. And Dan, obviously if you're looking at the development financing side of it, that means you're taking obviously a very good look in terms of risk, in terms of what you're seeing across Europe. Are there particular markets that you're more active in than others in terms of residential? Is it purely student housing? What's your sense of that? And do you then look at the UK differently to the Netherlands, different to Germany? What's your sense of that?
Sure. So first of all, every country is different. So you have to go country by country, usually city by city, to decide how much of an opportunity there is. Obviously, from a lending perspective, there's the overlay as well of what capital is available to investors who are seeking development finance. So for example, we recognize that Germany is a fantastic investment market, but from an alternative lender's point of view, it's less of an opportunity because the lending market is so strong there. So where we have found opportunities has been a function of both of those things, and that's what makes our job quite challenging. Finding where the good investment opportunities are and then figuring out where the financing capital is missing. So that's why Spain and Portugal have become big markets for us, starting in student, but I think in the larger cities, in Madrid and Barcelona, where you have large young populations, there's an opportunity to do a little bit more than that as well. So there's student accommodation, which we think is still, there's more development happening now, but there's still an opportunity there, just given how long the market went without really delivering new supply. But as well, you've got those young populations that are looking for a product that is evolved from student, but still has some characteristics that are similar, amenity rich, the ability to have a very simple sort of leasing product that people can buy into, and they can move very quickly in and out depending on their job situation. This really gets to, people have talked about this a lot, the millennial generation, what they want out of housing versus, the most, let's call it stereotypical German rental product where someone lives for 10 years, right? They're quite the opposite. They're quite a high mobile population. So Iberia has been very strong for us. UK continues to be a very big market for us. It's obviously the most well developed for student accommodation. And so it's become, over time, more institutionalized, and you have to be a lot more careful about site selection. So when people are building the 5th, 6th asset in a university town that isn't in London, obviously you have to be very careful about whether there is enough pent-up demand and the supply-demand analytics still work. So we think very hard about the UK, but I think it's still a big opportunity. France is another country where we think there are selected opportunities, in particular where you see large international student populations. Italy the same, you're looking for those kind of core cities, and funnily enough, they're not always the largest cities or necessarily the cities that will be on the top 10 that we saw in the presentation. What you're looking for is a good core university town with a good percentage or at least growth of international students that can support the business case.
Okay, good. And let's come back to the UK, James. Just give me, I mean, it's very interesting to be able to, you're looking after inward investment into Aberdeen specifically, but also here with the Scottish Cities Alliance. How is a city and a metropolitan area, I suppose, group of cities, are you seeing the residential markets? You can pick on whether that's student housing but how are you seeing that? And what are you hoping to do in terms of working with investors to be able to achieve what your aims are as a city?
Yes, we, I suppose we're a little bit behind the curve in Aberdeen. We saw a lot of development, especially residential, out with the city. And now we're trying to drive that back into the city. So there is a 25-year master plan for the city, and to lead that, the City Council has identified land and investment opportunities looking at residential mixed use, and particularly looking at the private rented sector, as well as student accommodation. So we're now seeing purpose-built student accommodation coming through. We've got 340 bed spaces, purpose-built, coming on stream next year, 2019, and also other opportunities around the city for private rented, which is another sector we're particularly looking at, which is different to what has gone before in Aberdeen. And so from that perspective, we're very much targeting smaller units, looking at infrastructure that goes around that, so digital infrastructure in particular, and how we support that infrastructure going into the ground. At the moment, we've got £40 million worth of fibre going in to create Scotland's first gigabit city. So 95% of property within Aberdeen will have gigabit speed broadband or access to gigabit speed broadband. And it's additional elements like that we're trying to add to make Aberdeen a attractive proposition as we come out of what was a bit of a slump in relation to oil. Oil price, Aberdeen revolves around the oil price. So I checked the oil price this morning, and $84 a barrel, which is significantly up, some of the highest it's been for 4 years. But along with that, Aberdeen is very much looking at investment beyond diversification, and the student element, R&D, 2 world-class universities is a key part of that, and the residential sector, particularly within the city centre, urban living, is very much part of that. At the moment, Generally, the investors are existing investors who know the city. So our job is to try and tell that story out with and get people interested in Scotland, in Aberdeen, and to look at those opportunities.
And let's pick that up. How important are things like, for you as an investor, Rainer, in the is cities helping you and supporting you, whether that's with infrastructure, superfast broadband, trying to make it a more attractive and livable city? How important is that for you as an investor?
It's extremely helpful, but in the current context in Germany, it's not a major element in the investment decision. Why? Because if we would do so, we would definitely be out of business. If you take a look at the top 10 cities in Germany, from Berlin through Hamburg to Munich, they have on their municipal agenda other priorities than residential / micro-living / student housing. If you go to cities who have, let's say, a very strong or stronger dominance of their education sector, like Heidelberg or Karlsruhe or Münster, the situation is completely different. Here, the municipality is pretty much aware of the economic dependency on the robustness of their education sector. And these cities tend, within the framework given by legislation, be more open-armed, more flexible in welcoming investors to ease their situation. Yeah? But on the bigger cities, I think for us as a developer, operator, it's more a challenge that within Germany you face a huge diversity in regulations, starting from the fact that you have 16 federal states, so you have 16 different building regulation sets. Each and every bigger city has its own parking regulation, has its own fire protection measures. Partly they have so-called skyscraper regulations in place. So if you think about standardizing, industrializing the rollout of such product across Germany, because you're doing 1,000 to 1,500 units, pretty much same style every year, it's still a dream that has not come true in reality.
Okay, good. I want to pick up with you, Thierry. Just in terms of what you're seeing, there's obviously a large part of residential which is about business to consumer or business to guest, depending on how you look at that. Does that add additional elements of complication to it? And what are you seeing in terms of the trends that residents are looking for? Are there particular things that you're having to do now that has changed over the past 2 to 3 years to meet demands of the new people in your accommodation?
Yeah, I think at this moment residential market is really strong in Germany because demand is high. So if you just look short term, we could just be lazy and just offer apartment for rent, and that's it, and tenants are queuing for that, of course. But if you look more midterm and you think, okay, what kind of apartment my clients will look, what we have identified, because we are in the hotel business and we are in the residential business, is that things are overlapping. So you have in city like Berlin, people which are commuting, working half of the time in Berlin and then working somewhere else, and then they can't have a long-term apartment. It's too complex. They don't necessarily speak German, so they don't want to take a contract with 1 year, 2 years fix. It's too complex. And hotel, even if we have fantastic hotel, you don't feel home. So what we are we are transforming part of our residential apartment in co-living apartment. So it starts for residential apartment with furnishing, but has also the costs of this apartment are increasing, and that's also a question for people to be in the city, to have affordable housing, and to have also a sense of the community. So with co-living, this is an interesting new trend where you can offer flexibility, because you can enter in an apartment quickly, faster than a traditional apartment. You can stay there 6 months to 1 year, so it's much more than the hotel. And you pay per room, so you have the feeling, which is not necessarily the case, that it's a bit less expensive. So this is a bit marketing trick because we have to live, and we need investment. But let's say the price per room could be like 500, 600, 700 per month. So which is less expensive than a two-room apartment where you will have to pay 1,000. So we have started these experiments now 1 year ago, and we want now to transform part of our residential apartment in co-living. So typically 3 to 4 bedroom apartment, and then we will offer co-living either for business people or with students. And the challenge is not only to do the real estate, but to have services, internet, Wi-Fi, laundry, to organize events, to organize service within the community, because that's what our clients will need.
Okay, good. And I wanted to just pick up with you, Dan. Obviously, LaSalle Investment Managers, large global operation. How do you see, let's say, student housing, senior living, micro living? Are there lessons from what your colleagues are doing in the US, where it's obviously a much more established market, that have led you to sort of growing strategy in Europe, or are you looking at it from a, we think this is an interesting asset class here in Europe and we're keen to see it grow? How do you see that?
But definitely from the international student demand perspective, there are lessons you can learn across markets. So some of our borrowers are active in markets that aren't necessarily obvious, like Dubai or Tokyo or even China. There have been a few developments, and you do learn lessons that are transferable. But I think that at the same time you have to recognize that in Europe, every country market has some very specific and particular requirements, and you have to make sure that you're adapting your business model to fit that. So I'd say if you kind of weigh the two up, the country-specific issues and getting the business model right for a country, which is part regulation, part what does the domestic market want, partly just tradition, that's probably a bigger factor than the international lessons. The really good operators figure out how to bring in students from one market into every one of those different countries. So having the international perspective is very powerful, but you have to first figure out how to operate in your home market, and that tends to be the biggest learning of any new investment we go into.
Okay, and James, just coming to you, obviously as a city you've got to balance both the need for residential but also the need for employment. So what's happening in terms of development opportunities which were maybe potentially ex-industrial sites, and then the transformation of those into residential? Is that something that the city is actively doing? And are there regulations that make that possible? Are there challenges to you within that dynamic?
Yeah, so just jumping back to that student accommodation example, I worked as a consultant on that site probably about 8 years ago, and that was earmarked for office development. And as the market changed, there was a recognition that that was an opportunity for student accommodation, purpose-built. And so now we see student accommodation, residential on that site rather than office. And the City Council's planning legislation, the framework around that is quite flexible in terms of looking at best uses for the site, getting that into city centre, and essentially changing that structure slightly within the city. So the city centre master plan that we have earmarks sites that perhaps have been retail, office, even some storage and distribution type uses that are earmarked now for residential. So there is a change, a regeneration element to that, and the planning framework and the governance around that is supportive, it's flexible, and there's backing from the City Council. Indeed, the City Council has owns some of that land, so they are actively looking at mixed-use development on sites that have previously been institutional have been office space. And so there's that active push from the local authority, from local government, to change use within sites. So yeah, it's quite I guess a favourable market for doing that in Aberdeen at the moment to look at. And whilst there is a balance to the economy, there are other sites that are still earmarked for the office, the commercial, the distribution space. So it's a balance, but the target is to get more residential into city centre to support the infrastructure that's going in there in terms of transport, road, rail, digital connectivity.
Okay, good. And we're coming towards the end of our time, but I just want to introduce a couple of other things, which are micro-living. Is it a reaction to high pricing, or is it a new trend? What are you seeing? How sustainable is that, do you think, in terms of it being a trend within the niche of residential?
Well, let me put that again into the context of the German market. In Germany, we have traditionally a strong residential rental market. If you look at the offer for rent below 40 square meter in size, it sums up to 10% of the market. In the big 10, 15 cities in Germany, we have now 80% of the households without kids, and between 65 and 70% single-person households. So by structure, there is a huge mismatch. That does not necessarily mean that every single has to live on 40 square meter size. But in the light of continuous rental growth, it becomes more and more an affordability issue, whether you have to multiply your 100 square meter in size with €8, 18 or 28. And in the light of this, we see a very strong pressure on the demand side for smaller units. This collides with a strong growth in student numbers, which we have seen in the last 10 years, be it international students, be it the share of higher education amongst domestic young people. And these two trends, together with a third one, which is that elderly people, where the kids have left the house, are fed up with gardening the estates. They're also looking back into the urban region to benefit from being more flexible, cultural environment, and so on and so forth. And all these trends together lead to a massive imbalance between demand and offer. And in the light of this, I see a very strong growth path for accommodation types which are focused on affordability, on design, on compactness, be it name tagged as student, BTR, co-living, micro-living, you name it. Yeah, doesn't make a difference. I think we will see over the next 10 years a very, very strong demand, which is pretty much depending on what is the status quo structures of markets. And as said, in Germany, there is this mismatch. In other markets, for example, the UK, a rental market is merely not existing or is now starting to build, driven more or less by the same influential characters. The Netherlands has a resi market, a rental market, where they have the same symptoms as in Germany. Italy, there isn't one. So there are different starting points, but the demographic, cultural, and lifestyle trends are pretty much the same all over Europe, which make me believe that this is not a German phenomenon. It's a phenomenon that we will see in most of the continental European markets over the next years.
And Thierry, at the moment, micro-living and student housing, relatively small parts of the overall residential side. Do you agree with Rainer? Do you see that area growing? How does that influence your investment strategy going forward?
I think one of the main drivers is the price, because 15, 20 years ago, students in Berlin or in Hamburg could have like 3-room apartment for a couple of €100. So now it's not there anymore, and either producing co-living, micro-living, or doing sharing flat with co-living institutional or informal, I think that's the trend, because the trend is not necessarily people want less space, but they really want to be in the center of the city, not to have to commute, because also time of commuting in big city is higher. They want to be full in services, so they accept less space for the same price, but they are in the city, they have services. And I think what is also important is on the new generations, apartment is just a product of consumption, so it's not about long-term plans, so they accept maybe smaller unit living because maybe they travel a lot, and maybe after they will move to another city. So we have to think also apartment which could change, because I think micro living is interesting, but we have to think also what can we do. Okay, students, but which kind of the clients we can do. Can we transform also when you do new development? You can do micro living as start, but is it possible in 15 years to turn it? So we are a bit careful to be able to turn all these products, because maybe the demand could change in the future, and we don't know exactly where it will go. So flexibility of this product for the future is also important.
I've got one last question, which is just to try and drive this down to investment. Based on your kind of views on the market, where would you invest? James, we'll start with you, but I have a feeling you're going to say Aberdeen.
Surprisingly enough, yeah, I think Aberdeen is coming out of a period in time where we've seen a bit of a slump. The amount of infrastructure investment going in, the leadership from the local authorities to try and help drive investment, the fact that we as an organisation now exist where we never have before. I think there's an opportunity there for international investors to come into Aberdeen where they perhaps in the residential market where they haven't previously, and it's been done by local guys.
Okay, good. Dan?
So LaSalle has this theme of talking about investing where you see strong trends of demography, technology, and urbanization. So to us, that's on the lending side, that's exactly where we're thinking as well. So it's not a specific location, it's these kind of key cities throughout Europe where you see those trends driving towards greater urbanization, increasing population growth in a region of the world where on average probably there's downward pressure on population, but the big cities keep growing, people want to live there, and they have particular needs living in big cities. That's where we're really focused.
Okay, great. Rainer?
As I said, I still believe there are tremendous opportunities in the German market in that sector, but looking a little bit beyond, I think for the next 2-3 years, we will see an increasing traffic in countries like Italy, Poland, and big parts of the CEE. A little beyond that, I think the Baltic states, Serbia, Bulgaria, Greece, potentially, or Turkey, depending on how these countries evolve over the next years, might become more interesting. But as I said, that are then more immature investment environments, and you need to like that as regards your risk-return profile.
Okay, good. A lot of opportunity there. Thierry?
Yeah, what we will try to do is go out of the mainstream of Berlin, Hamburg, because it's too crowded. So we are now looking like secondary city like Hanover or Leipzig to see if we can find affordable investment opportunity.